All right, we're on. Hi, I'm Bill.
Alex.
We're with AIO Financial. We just wanted to talk about inheritance, give you a little information. We've seems like recently we've had a lot of people come to us with inheritance. Well, and for everyone, they should be thinking about their estate plan and what they're doing to pass assets or what happens when they receive assets.
Yeah, and an important point because there's always that moment in life where you have to consider that, especially, yeah, well, not everybody wants to think about it that's that like in that way, but I mean, there's always a situation when you're getting to a certain point of your life, uh, old enough, I assume that preferably that's the case, and well, you need to know, especially like older people or people, let's say, that have health issues, that they need to know exactly what they're doing with their assets, like either their properties or on this most of the situation it's just like invested assets, but you really need to consider how everything is going to transition if something were to happen to you.
Yeah, I think everyone, even if you're younger, if you have kids, you never
Yeah.
know what could happen. I mean, we had an uncle get hit, just have a car accident, and boy, you want to have some plan in place. I had some lawyer told us, do you have an estate plan? If you don't have a written one that you've written, you do. You have the state's default. You're just going to use
Yeah.
whatever the government tells you have to use, and that might not be what you want. Um, so I think oh, go ahead.
No, and I think that most likely is, as long as you don't have any dependents or anything, that might or might not apply. But I think that even if you don't really have a dependent, even I think that whenever you just started to like working a year ago, even so you already started building something. So I think that even if you don't have that much, or you don't think that um your like your disappearance will mean something, like at least for whatever kind of assets that you have, at least it's good to designate, because if you have a relative, or let's say brother, sister, niece, or whatever, it still kind of helps understand that what you're doing, like what you're leaving behind, at least it'll be something that has a smooth transition.
Well, yeah, if you have assets, you want to decide where it goes. So it goes according to your plan. So whether it's people or a charity, you can give it to the Humane Society or some
Yeah.
help whatever, rescue dogs or whatever you're into. There's a lot of organizations that could use your funds. So you might as well designate it. And it's something you don't think about all the time. So you may put a plan in place and then your assets could grow. You could be adding to them for 20 years before you think about this again. And if something were to happen, with estate plan documents, there's also documents that are useful while you're alive, like a healthcare power of attorney, someone that can
Yes.
make healthcare decisions on your behalf while you're alive. And that's nice to have specified. Um, and even,
Yeah.
yeah. Well, I
Yeah,
guess with
because
inheritance, if we just focus on inheritance, a couple of points I'd bring up and then you could comment, but I'll say understand the legal framework. Where are you? What state? What country? What's going to have jurisdiction? Where are your assets? You want to make sure, hopefully you've thought about this before something happens, but if you do receive assets, or you're a trustee of an estate, personal rep, then you'll be dealing with this. I think another issue is communication between beneficiaries, whether it's family members, siblings, just avoiding conflicts, avoiding people getting upset or generating
yeah.
legal issues. Update your will regularly. That's good advice. Just we've had that where people get divorced um or they get married and still have a sibling on their beneficiaries instead of their spouse, or oh yeah, we had someone with the wrong spouse on a 401k. They're just things
Oh.
that you want to make sure you're checking. making sure they're up to date because that could be not good for sure. Plan for taxes. We'll talk about taxes a little. Think about non-financial assets like real estate or I don't know, something expensive that's not a financial asset. Could be collectibles or art, jewelry. Choose your executors wisely, the people, the trustees, the people who are going to take care of organizing and executing your desires. Yeah, think about family dynamics, provide for dependents, seek professional advice. I don't know. Anything else you can think of there with that list, Alex?
No, actually, I think that the list and the good thing about that list is that I think it pretty much sums up each step of the process. To be honest, like I think most of the times people just forget and like there's a lot of situations when even when you inherit, let's say, oh, I inherit my, let's say my invested assets, it's worth $1 million, and I equally inherited to my four sons and daughters. Even so, that might cause a problem because there's always like for you it might be something so like I'm being fair enough, four parts, that's it. But there's always conflict. So I think that's a good point that that it's set up and let's say set up in stone what you want to for it to be proceeded because in the end even when you do things like that not everyone goes like likes the idea of why am I getting this why I'm not getting more.
Yeah, I agree. I think too, if you have four kids or four nephews or whatever it is, the some people could feel like, oh, I took care of dad more than you did,
Yeah.
or he promised me the car, and I know it's not written down, but I kind of assumed it was mine.
Yeah.
He told me it was going to be mine. There could be a lot of there's always a reason to fight, especially siblings. It's great.
Yeah, no. Yeah, I think that as detailed as you can be with each asset, like as possible, just do it. Like you will definitely. But I mean, if something were to happen to you, you wouldn't care less about that in the end, and you won't be
Yeah,
there.
you're done.
Yeah, but I mean, it could save a lot of time and trouble and possible fighting for the whole family.
Yeah.
But let's get a like super specific answer on this because we've had some questions about what exactly is considered an inheritance, and it's something real simple, right? Like because people say, "Oh, I inherited this from for whoever a family member." But yeah, but I always get to the point like, well, you don't, you got that gifted or you got that just rolled down upon you. But because in the end, an inheritance, it's specifically when the other person passed away. That's actually when
Yeah,
it's
you got it. And that's important. That's a good point, Alex, because gifts are treated differently than inheritance. If I have an asset like a house that I bought a long time ago and it grew in value and I gift it to someone, they have to pay taxes when they sell it. And I mean, there could be some exclusion if they've lived in it for 2 or 5 years, but they're going to pay that capital gains. Whereas if it's an inheritance, there's a step up in cost basis. So there isn't the capital gains. In general, with inheritance, you really don't pay taxes on that's coming in. You'll pay taxes when you take money out of an IRA because no one's paid taxes on that money. But in general, receiving assets, it's not a taxable event. But yeah, that's different than gifting is a different issue.
yeah, I mean that was something that really crawled my mind. Like at the beginning, I didn't quite understand what they meant. Like because you're receiving something from some like a family member and you always, like, at least most of the people just say, oh, I inherited this. But yeah, it's treated way differently, at least from the government part. Yeah, they consider uh, whole different stuff if the person is alive or
Yeah.
it's not.
Yeah, it's pretty
You know,
clear. Either they're dead
yeah.
or they're not. And did
But
you get it after they died or did you get it before? And that's how it's going to be treated for taxes. Um, but so looking at, I mean, one of the big things we deal with, and I don't know if it's a big thing, but one of the issues we deal with is inherited IRAs. So if you just inherit money from a bank account or a brokerage account or money that the person's already paid taxes on, they die, it could be Apple stock or Tesla or whatever, that purchase price moves up to the date of death or 6 months after. So if I receive inheritance and it's investments or it's cash, I don't pay tax. I could sell it all. Unless I've held it for a few years from when they died and it's grown a lot, then you pay taxes on that. But if you sold it right when they die or 6 months after they die, you're not dealing with taxes on those types of accounts.
Can you only pay taxes on the gains after you become the owner of the inherited account?
There you go. Yeah. And then the one tricky one are these IRAs. So your traditional IRA or a 401k or these accounts where you put money into but didn't pay taxes on them, you got a tax break. No one's paid taxes on that money. And if you die, it goes off into an inherited IRA. I guess there's two rules. If it's your spouse that gets it, it just goes into their IRA. If it's a non-spouse, so it could be kids, it could be parents, it could be friends, it could be someone else, then it goes into an inherited IRA. And then I think there's two rules here. Did they die before 2020? Did they die after 2020? Well, and the third rule would be if it goes to a charity. So if you take your IRA, gift it to charity, you haven't paid taxes on it. The charity gets it, they don't pay taxes on it. They're a nonprofit, not paying taxes on those gifts. So really, if I had an IRA and a taxable account and I wanted to give some money to charity, I should make it the IRAs because they're going to get the full benefit from it. Whereas if it goes to people, they'll have to pay taxes on it.
Yeah, definitely. But like on the difference, let's say I have an IRA account and I have a Roth account. It's like whole different things. And I inherited like both of them. I pass away, I inherit both of my accounts to.
Well, if you pass away, someone else inherits it. But yeah, I get you.
Yeah. I like my wife get my accounts. So what's the deal? How does she deal with both of the accounts, or how?
How are they different? Yeah.
Yes.
So an IRA, a traditional IRA or 401k or a SEP or a simple IRA, these accounts where you haven't paid taxes. So those, when you take money out of them, you pay income tax, ordinary income tax on them. So the percentage will be different depending on your income or how much you're pulling out. If the person is a spouse, it just goes to their account. So if you die and your spouse gets it, then it's like her IRA. She doesn't have to do anything. She's just going to wait. Maybe if she's 75, then, or 73 right now, but when she hits 73, she'll start taking these required distributions. Great. Just like her normal IRA, nothing special about it. It'll roll into her name IRA. Same with the Roth, roll into her name Roth. Nothing tricky about it. If it rolls into an account of someone, or if the inheritor, the person inheriting it, is not a spouse, and you've died after 2020, which in your case, if you're going to die, it's going to be after 2020. Then you have to distribute all of it. There's a minimum distribution, but you have to distribute all of it in 10 years. You have 10 years to distribute it. So that's for an IRA, the Roth, the SEP, the 401k, the simple. It has to be completely out of that account in 10 years. Now, you could do minimal distributions for 9 years and then take the rest. You could do a tenth each year. You could take it all out in the first year. These are minimal distributions. And if it's a Roth, you don't pay taxes on it, but you still have to get it out in 10 years. So yeah, for a Roth, you could just let it grow tax free, do the minimal distributions, and then and the minimal distributions are based on your age and the life expectancy tables. So for a 70-year-old, it's around 4%. It'll go up the older you are. The younger you are, the lower the percentages. So a Roth, you could wait 9 years, just do the minimal distribution, then take the rest at the end. It's grown tax free, it comes out, no taxes, everyone's happy. The IRAs, though, you want to look at your tax brackets. And if you're going to retire, maybe you do minimal distributions, then start taking larger distributions. Or if you need it for paying debt, maybe you do take more out that first year. Or maybe you fill tax brackets. You fill up that 12% or 22% bracket. So definitely tax strategies involved with doing that. But you have 10 years to get it all out.
Yeah.
He died. Go ahead. Sorry.
So if you're, let's say, pretty young, you inherit a big, like a, let's say, 10 million IRA. On the tax situation, then it will be like, yeah, quit your job and live off the 10 years without working to avoid taxes as much as possible. Because in the end, let's say that will be, if you have 10 years to take all of the money out of the IRA, you'll have to spend at least $1 million a year. That pops you up until the highest tax bracket.
Well, I guess, right. If you're taking, let's say you have 10 million inheritance, you're taking 1 million a year. Let's say it doesn't even grow, to make it simple. You take $1 million a year, you're right. You're going to be in the highest tax bracket. So you're going to be paying, when we're recording this, 37% plus whatever your state tax. We're fixed 2.5% state tax. You'll pay that each year. And if you earn any income above that, you'll just be paying net about 40% in taxes. 60% you get to keep, but you're going to be in a high tax bracket. But if you're paying that, the remainder of it, let's say it's 40%, so 600,000 after taxes is what you'd get a year. You can invest it. You don't have to spend it or anything. You can invest that. If you're working, you can put, maybe that's a time to maximize your IRAs or your 401ks or your individual 401ks to minimize the taxes from your income because you're getting a big benefit.
Even so, you try to do the best you can with the rest of what you got. You're right. Contributing to your IRA as much as possible. I think even so, a lot of people ask us about oh, if I have to take it out of my IRA, then do I have to spend it? Not necessarily. What you can do is actually just move it out of your IRA and put it on your individual account.
Yeah, you can invest it.
Yeah, just reinvest it into a taxable account, and that's it. You don't necessarily need to just spend it away.
Oh, definitely not. That wouldn't be smart, probably, because this might be your future assets so that you could retire. I think another rule, if someone did die before 2020, we don't have to focus on this because it's already happened. That's already been taken care of. But the old rule was it would just be paid out with these minimal distributions based on their life expectancy. So you'd be getting you'd have to pull out a small percentage. That's gone right now. If someone dies going forward, you got 10 years to get it all out of those accounts.
Now that you say that, I know that there's a specific exception for the 10-year rule. There are certain individuals that are exempt from if someone did inherit an account from someone that died after 2020,
Yeah, well, you're right. You're right. So, I mean, that's going to be minor children, disabled individuals, chronically ill individuals, not more than 10 years younger than the deceased IRA owner, surviving spouse. I mean, that won't have to deal with the 10-year rule. So those are the areas. I mean, spouse is the most obvious one, but yeah, the minor children could easily be an issue.
Yeah, I remember something like that. The minors and young disabled people that
You got it.
inherited them. Yeah, that's a good one.
Yes, it's good to be aware of. They don't have to take it all out in 10 years. They're exempt from that rule. Um, I think the other piece that comes in with inheritance is estate taxes. And
Yeah.
here it's very political that if you have, I mean, there's this portability, so it's really high. Right now it's what, 12.9? Lost my page. 12.9 million, 12.92 million, I guess, per person that you can give as gifts or give as inheritance. It counts, it's a together number, a lifetime number, without paying estate taxes. And there's portability. So if you have a spouse and they die and you inherit all their assets, then your limit is, now we're up to 25.84 million.
That's
So it's
good.
a huge number. Now in 2026, that's supposed to go down in half and portability may go away. And so, it changes. It hasn't always been at this level, but currently it's a very high level. But above that, you're paying these estate taxes, which can quickly get up to 40%. They can get up higher, but until you hit those, that's a lot. That doesn't cover many people. Most people are within that, and you're going to get inheritance and not deal with estate taxes. Estate taxes are really for the very, very wealthy at this point, unless they lower it quite a bit.
Yeah, but yeah, it's not something like normal. At least I can consider like common to inherit like less than $10 million, and that's it. I mean, yeah, there are certain individuals that can give away hundreds of times more than that, but yeah, usually like what you're gifting or what you're giving away, I think that for now it's a fair amount. And did you say it's going by half? I see that in the like at that point it might kind of start to affect a couple of people, but still, it's a really big amount anyway.
It's a really big amount. I mean, they talk about these death taxes here politically, and it's really, most people are not going to be paying estate taxes, or their estate isn't going to pay it. So what happens is, if I have an estate that's above that, I die, the inheritance, the estate pays it first, and then the remainder goes to the beneficiaries. So the beneficiaries aren't paying on the money they get. The estate will cover it, but still, the estate's smaller. But it's a real rich person's issue at this point.
Yeah.
I mean, I think it should come way down, but that's we'll just report on what it is. Yeah, I think the other thing is there's a gift limit each year, and it's what, in 2024 we're talking about $17,000.
Yeah.
So you can give $17,000 to each individual. So if I have a spouse, I could give to one kid 17,000. I could give to the other kid 17,000. My spouse could give to the same two kids 17,000 each. We could give, let's say they're older kids with spouses and with kids. I could give to my kid, their spouse, their kids, 17,000 each. My wife could or just my spouse could do the same thing. So we can actually give quite a bit of money under the exclusion limits. And under the exclusion, you just give it, you don't report it, it's nothing, it's under the limits, there's no issues. If you go above that, let's say I'm really rich and want to get rid of, lower my estate. If you go above that, you just have to report it. No one's paying taxes on it. You're just reporting it, and it goes against that
12
big
million.
estate tax limit. So it's, for round numbers, let's say it's $13 million. If I give away $1 million, above that exclusion, then I only have 12 million for my estate tax limit before hitting that estate tax threshold. So, yeah, depending on the situation, you can move quite a bit of money annually, but if you do more, if you gift someone a house, I mean, we've had that where you get co-signers. I want to join own the house with someone, with my kid. Well, if you join own, then you've gifted them half the house. And, again, for taxes, that may or may not be the smart thing to do. If they're going to live in it, it hasn't appreciated that much. They might be under the exclusion. They won't pay taxes on it, but you just things to consider. Yeah, I don't know. Any
Yeah,
thoughts on that total limit?
I think so. But I have one question that it might or may not apply. When let's say I have a property and I want to, is there a way for me to donate the property to someone else, or
Wait, to charity or to a person?
let's say a person? How
Yeah,
would
no, a
that?
donation, a charitable donation. I don't know if this is what you're thinking, but charitable donation to be counted and skip all the taxes. And so no one's paying taxes. It has to be a registered here, a 501c3. Has to be a registered charity. So I don't want to offend anyone, but let's just say my cousin might be a charity case that we're all like giving him out because he's a charity. What he's not really a charity in the eyes of the IRS.
Yeah, yeah, it's like you're not a registered, yeah, charitable organization.
Yeah, you got to be doing something, education or serving some community or doing something that's not just benefiting yourself. So yeah, no, there's no way. If you have land or you have property or you have a house or whatever, and you want to get it to someone else, you're either gifting it or it'll be inheritance when you die. Yeah. But if it's a bank account you want to get to someone, as long as you stay under the limits, you can start moving it each year
Yeah,
and get it out of your
yeah,
name.
yeah. Especially, yeah, you don't want to have like a super massive amount on your account and then having to deal with the estate tax limit.
Yeah, I mean, again, this is a real small sliver of society that deals with
Yeah,
estate tax. So I even hate to waste too much time on it. But inherited IRAs, that is a lot of people are dealing with. And then just inheritance in general. I think the other thing to be careful of is big lumps of money that come in. And I've heard this, I saw some documentary about athletes, football players. A lot of them end up going bankrupt. You have a lot of money in a short period of time, and it's easy to blow through it. And that's like lottery winners or inheritance. Um, Boy, it's easy to think I have $1 million. I'm set. I'm quitting my job. I'm gonna get a new car. I'm gonna go to Vegas and have fun. And you could blow through money yeah, quickly. Life's long, it can be long for people.
yeah, definitely. Like I remember a couple of years ago, and this might have happened like 10 years ago or something. That I believe that it was in the UK. A guy, like a garbage man, he won the Powerball, and I don't remember the amount, but it was a massive amount, and he blew through the whole
Yeah.
prize in like a year and a half or something.
Yeah.
And next year he was just working at the same thing. Like, oh my God, how can you just spend that much money
But
in
you could
just
see, I mean,
1
I've
year?
heard stories of like athletes, you get every cousin in the world coming to you saying, "Hey, I want help opening a restaurant." It's an investment.
Yeah,
Or I need help with whatever. You could, invest in your, friends and family's ideas. You could start your own stuff. I mean, really, it's or get into new or high commission products or unregulated securities, things that are not tried and true. And yeah, you could go through money and just the expectation. Oh, I'm making this much. I should be living at this level, and I should be getting my mom a house and everyone else a house. And yeah, it's fine.
Damn.
Yeah,
Yeah, and in the end, you're the one that has to sell your house because you can't afford it.
yeah, right. I don't know. I mean, everyone's situation's different. We get people saying, I got a big inheritance and it's relatively not that big. And we get people saying, I just got a little inheritance and it's, everyone's got a different situation, perspective, different goals. But I think the best advice is just plan, think it through, think of the consequences. If you do end up with a bit of money, make a plan with it. What do you want that to help you in retirement? Do you have a prudent reserve? Do you have debt to pay? Make a long-term plan and not frivolously blow it, because probably the people who left you the money are hoping you'll be responsible
Yeah.
with it.
Yeah, definitely. Like, if someone's giving you the money, that's because they expect you to do something good with it, or at least that it will help you out and not make you just throw it away.
Yeah, I mean, definitely, we have clients very fortunate to receive inheritance, and it's great. It's helped their lives. It's given them different opportunities, but it is something to be responsible with.
Yeah.
All right. I think we covered what we need to.
I think so.
So this is, we're AIO Financial. Just so you know, AIOfinancial.com. You can get information from about us. We're fee only. Financial planners held to a fiduciary duty. We have tools like a retirement planning, a long-term spending calculator that can help if you want to look at what your income, assets, inheritance will do in the long run, how that a plan could work out for you. You can find it at AIOfinancial.com/resources. And I don't know, anything else?
Yep.
That's
Nope.
it.
That was it.
All
Just
right.
let us
Thank you
know.
very much for watching and spending your time with us.
Okay. Have a nice day.